But we are seeing continued revisions now and quite significant corrections from the major forecasters. When you look at the IEA, OPEC and CNBC side by side, whose numbers are closest to reality right now in your view?
Well, if you wanted to look among all of them, definitely OPEC has been steadily the numbers with very little revisions or almost no revisions. So we could say that, of course, the OPEC had been closer to what the realities are there. But the great news is that the gap between IEA and OPEC have been reduced significantly. Last year, this time when we were having this discussion, the market confused and torn between a huge gap that the two institutions had regarding estimating the demand growth. But now IEA has caught up with OPEC. But what is important is that based on IEA, according to themselves, their methodology is based on the policies of the countries. And if we see these revisions upward, it tells us something that most of the countries' policies had either changed or they are having a more realistic view when it comes to energy. Looking at it here, then in United States, we see that the energy price electricity price increases. And when you look at the top states that are having a much higher average of electricity prices are in blue states, which have tighter regulations when it comes to using the local fuels. Carbon prices are higher. There are tighter carbon and renewable energy regulations in blue states. And we see that much higher average of electricity prices already before even the demand explode because of AI and data centers.
And just quickly on these forecast revisions, because I think this is important to point out, how much credibility damage is being done when these agencies continually revise their outlooks, particularly when the conversation around the investability of this industry is so critical right now?
The credibility, before going to credibility, I want to mention something more important, and that's going back to your first question about why the prices are not where that they should be, and that goes back to sentiments, and that a lot of the paper market trades are being done by algorithms, which are reading all these news headlines and estimates, which often are not accurate. So data accuracy is very important, and many leaders like Saudi Energy Minister Prince Abdulaziz bin Salman have repeatedly saying that data accuracy is important principle for energy security. So looking at that data accuracy and how important it is for market and energy security, definitely going back to the revisions of IEA, we could see that, yes, the market has been repeatedly seeing IEA changing and revising. On the other side, definitely OPEC is steadily keeping its numbers the same as they were, but also the functions, not just because of the numbers and sentiments and messaging, but also OPEC's decisions and policies that they are making. Look at it, Dan, with all the price volatility that all different commodities had this year, with all the uncertainty over prices, or global economy, tariffs, geopolitics, oil had the minimum volatility, which again, it's important for investors. They need certainty and credibility, which we should give credit to OPEC for that.
We've spoken a little bit on the supply side. Let's talk about what's going to happen to demand as well. If we see prices stay in the mid to high 50s, what does that do to producer behavior over the next 6 to 12 months?
This is a very basic economy. When the prices are down lower, definitely consumers are using more energy, and the demand will increase. The economy will function better. So definitely lower oil prices always induces and incentivizes demand. So we could expect higher demand. But again, and just before we start our discussion, you were talking about Chinese visit to the Middle East. When we look at the short term versus long term, we see that there is a huge potentials for a growth of demand and long-term securing the demand for oil, gas, and all sources of energy. But when it comes to renewables, even nuclear in the United States, when we look at it as a solution for long-term demand, meeting the huge demand increase, still it's years ahead, decades ahead by the time we can increase this capacity. So definitely oil and gas and fossil fuels are going to see the increase in demand in the medium term. But again, looking at it, many countries that have a strategic view, like China, they have been stockpiling above their actual demand, and they're looking into long-term securing this, the supplies.
Indeed. You mentioned what's happening with US electricity as well, and I wanted to go back to this because, as you say, prices partly rising here due to AI and data center demand. But would you say that that is proof that energy demand is ultimately not slowing, it's shifting? And is this market underestimating how much fossil fuel energy is still needed to support this enormous growth that we're seeing in AI?
Yes. So, particularly now under President Trump administration and Council for National Energy Dominance, energy is at the core. Energy, both energy and supply chain, which including critical minerals, are at the core of national security discussions in the United States. And the changes we see, yes, already the electricity prices are increasing. Let's say states like Virginia, particularly areas with North Virginia, that they have huge data centers. But what we have been noticing, and the trend that if you look at it, is that the prices of electricity, even before the demand from data centers increase, because we have, let's say, huge projects in Texas that are demanding electricity, but the prices are not high as prices in Massachusetts or New York or California. So if we look at it, we see that not just obviously the grid infrastructure in the U.S. in many states needs to be renewed, and we need to look into the policies to increase and induce the demand and also the grid expansion in the United States. But policy regulation, Dan, has had an important impact on the prices in the states. When we look at the blue states versus red Republicans and Democratic states versus Republican states, because in the red states, Republicans have much less regulation when it comes toward which type of energy to use. And in the blue states, in contrast, for the past many years, there has been a very tight and hard regulations when it comes to carbon pricing, to use of renewable versus fossil fuel. So those states that they had tougher regulation in terms of which fuel to be used for electricity in the United States versus using or encouraging all sources of energy, including fossil fuel, are showing currently higher energy prices. So it's I would say that the United States is a great case to show that why the country is and the administration are doing their best to increase and incentivize the investment and the both expansion in terms of both generation and also distribution of electricity. We see currently already, before even the demand explode again, increase or surge significantly because of the AI and data centers, already those states with tougher regulations that are favoring certain types of energy, let's say versus fossil fuel, are having much higher electricity prices.